If you want to venture out of this video, please like, subscribe, comment, share. I want to hear your comments on this. Today, we're going to cover an interesting topic on the tariffs, the 34%, the retaliatory tariff from China, the 54% tariff from the US. We're going to see how it's affecting us. The markets have been sliding, and this isn't new. This has been going on for years. Tariffs have been America's weapon of choice for the longest time. And this isn't new, and Trump is just reenacting it again. Today, we're going to dive into the impact that these tariffs have on the Americans, on the millions of manufacturing jobs have been lost, and let's see how it's affecting the stock market. Dow Jones lost about 2,200 points today and lost about $3.1 trillion in the market cap. So what are tariffs? Tariffs are import taxes to protect domestic industries, domestic manufacturing, domestic jobs, and Trump has been pounding the word tariff since 2018. He's been talking about tariffs nonstop and how U.S. has a trade deficit and how China has a trade surplus and how the rest of the world has trade surpluses and the U.S. is just not doing good enough on their trade. One thing he's trying to do, which is amazing, bring back jobs to the U.S., bring back businesses to the U.S., have Apple invest $500 billion in U.S. That all sounds great in theory, but look what's happening today. Today, the stock market lost $3.1 trillion in market cap. Today, the Dow Jones lost 2,200 points. Today, a lot of people lost a lot of money. If we go back and look at the historical context in the 1930s, which was the Smoot-Hawley Act, which two congressmen brought up the legislation for President Hoover to sign into act, the stock market started to crash. And that was one of the contributing factors to the Great Depression. The market crashed from 1928 until 1932. And when they introduced the Smoot-Hawley Act in 1930, which was, again, for the same reason, to protect domestic industries, to protect farm jobs, to protect U.S. jobs here instead of shipping them outside and importing a lot of goods and services outside of the U.S. and making sure that Americans use their own goods and services and we export our goods and services to the rest of the world, the market crashed. Look at the stat today, okay? December 7th to December 8th in 1928, the House Ways Means Committee scheduled tariffs testimony hearings. And if you look at the chart, the market has been going up, when you look at point number one. Point number two, March 25th, 1929, senators predict difficulties to limit scope of tariffs. It shows the market already a little bit stagnant, goes a little bit up, goes a little bit down. Point number three, May 28, 1929, House of Reps passes a broad version of the tariff because they were thinking that the tariffs are not going to affect the U.S. economy. And then look what happened right after that. Number four, October 23 to 29, in 1929, Senate switches tariff scope from narrow to broad. That means they're going to put tariffs not only on a certain type of a product, good or service, but they're broadening the market and putting tariffs on a larger scope of things. And the market started to crash, okay? And look what happened today. China put a retaliatory tariff, 34%, on a bunch of goods and services that we're importing from China to the U.S. And I'm going to look at the final point. Point number 6, June 13 to 18, 1930, Congress passes Smoot-Hawley, and President Hoover announces that he won't veto the act. And the reason why it says that, because in the beginning they were hoping that President Hoover is going to veto it. And it's just been crashing and crashing. And look what happened to the Great Depression. Families lost, jobs lost, businesses closed, banks out of money. People didn't have food on their table. Homelessness and joblessness was on the rise. We're hoping that's not going to happen today, but we got to also take into consideration what happened in the past. A lot of people say we predict the future based on history, right? Based on the past. And that's exactly what I'm doing here right now for you. I don't want for us to have another great recession, and God forbid if we have a great depression. If we look at a historical context of things again, in the 1960s and the 70s, thanks to the General Agreement on Tariffs and Trade, U.S. tariffs were reduced from 10 to 15%. The economy grew steadily. They grew at about 3 to 4%. Manufacturing jobs were strong and they were very abundant. In the 1980s, the Reagan administration negotiated with the Japanese government to limit the amount of vehicles being imported to the U.S. because they were making such great vehicles and so many vehicles being imported to the U.S. The U.S. had a trade deficit in the auto industry, and they negotiated to put a halt. They can still bring those vehicles to the US, but at a certain level. So instead of bringing 3 to 4 million units of Japanese vehicles to the US, the Reagan administration negotiated to bring it down only to 1.68 million. So that would enable the US auto manufacturers to make their own cars, to sell their cars to the US population, and also to import their cars to the Japanese people. 1994, NAFTA, President Bill Clinton. I talked about this in my previous video. He had the longest run from 1992 until 2000, had the highest GDP growth of 4.8%. And this is also a contributing factor why he had one of the highest GDP growths. NAFTA, North American Free Trade Agreement. What did that enable? It enabled Canada, Mexico, and the US to trade everything they wanted duty-free, no taxation. That means it's open for businesses to kick ass. It's also open for people here in the US at home not to spend more money than they were before the NAFTA agreement, because every other product that was brought to the US had a taxation system, had a duty, okay? And if that duty is paid by the person or the company that is bringing that good or service to the US, what are they going to do? They're going to add that taxation to you. They're going to add that taxation to the consumer. They're going to add that taxation to the American household. What happened with the NAFTA agreement? Trade exploded. Trade between US and Mexico before NAFTA was $81 billion. You know how much it went up? 200, 300, 400? No, $535 billion in trade. That is phenomenal. That is immense. That is a lot of money being traded between two governments, and a lot of money in between making shitload of money, okay? On top of that, it also reduced prices for the average American. In 2001, China entered the World Trade Organization, and there was one very important deficiency that the U.S. had. That was a trade deficit. The trade deficit ballooned from $81 billion to $530 billion. And that's due to a lot of manufacturers, a lot of big companies moving their manufacturing jobs and shipping them to China. In that time period, U.S. lost about 4 million manufacturing jobs, which is a lot of jobs. And what President Trump is trying to do is bring those jobs back to the United States, which is fantastic. That's a great idea. But at what cost? And when is it a good time? And I spoke about this in my previous video 2 months ago when I mentioned you want to bring those jobs back, be ready first, build those plants, have the investments in the beginning before putting those tariffs. You know, tariffs are a great bargaining chip. You know, they're one of the weapons used during trade wars or economic wars. But this isn't the time. We're not ready. China is the world's largest manufacturer in the world, okay? First is China, then it's us. But they're twice as big as we are. Do you think China is going to have a hard time manufacturing a lot of goods and shipping them to the rest of the world? If it's not the US, they'll ship it to other places. If it's not the US, they will ship it to India. They will ship it to Russia. They would ship it to all of Southeast Asia. They will ship it to the rest of the world. US is not the only country that's buying goods and services from China. On the other hand, us, the US, being the number 2 largest manufacturing country in the world, okay, our ways can be limited. We walked into the ring without any gloves on, okay? That means we're not prepared, and the other party is. Instead of us building first, trading later, we're trading now and then thinking how we're going to build later, okay? Yes, it's great. Apple is going to invest $500 billion, but how long is that going to take? It's not going to happen overnight, but imagine if we had Apple invest $500 billion from day one before announcing any trade wars, okay? And talking to Apple and telling them, hey, if you don't do this, we're going to announce trades. You're going to be screwed regardless. So make sure you open up those businesses, those plants, those manufacturing, make those iPhones here. So instead of having those iPhones being made in China and they can be made here, have those jobs back, have that money back in the US, have that money back into US households. That's what I'm trying to say. Do that first before announcing any trade wars. You can do the trade wars later. So we don't have a market crash, so we don't have a recession, and hopefully we don't have a depression. Tariffs are powerful, but they cut both ways. It's not a one-way street. It's a double-edged sword. It can be either super beneficial or super bad for us. And as of now, it's bad so far. They can protect American industries, but at a cost. They can create leverage, but also backlash. Like the backlash we had today from China, 34% tariff. The real question isn't whether tariff work. It's whether we're using them as a short-term fix, or are we using them as a long-term fix or a long-term strategy? That's the problem that I'm having with this issue. I want you to tell me, what do you think about the tariffs? Is this something we should pursue forward, or is this something we should stop or maybe reconsider? Because tariff wars can also hurt our international relations with all these countries. If you want to eventually have this video, please like, subscribe, comment, share. I want to hear your comments.